Okay, so lesson 2, analyzing how transactions affect accounts. We're going to restate and apply the 4 questions necessary to analyze transactions for starting a business into debit and credit parts. Okay, so we learned that debit and credit. What does debit and credit mean?
Debit's on the left, credit's on the right.
Okay, debit's on the left, credit's on the right. Doesn't have anything to do with debit and credit cards. Okay, so now we're going to analyze some transactions and put them into debit and credit parts. We will be looking at a chart of accounts, which is a list of accounts used by a business. Each transaction changes the balances of at least 2 accounts. Always 2 accounts. Could be more, but you always have at least 2. This is looking at the chart of accounts for Delgado Web Services, which is the business in the book. And you can see that it's categorized by assets, liabilities, owner's equity, revenue, and expenses. And they all are given certain numbers. Okay, so let's start looking at some transactions here. First one, receive cash from owner as an investment. So the transaction is January 2nd, receive cash from owner as an investment for $2,000. If we break that down into the accounting equation and the 2 accounts that are affected here, we have cash and Michael Delgado Capital. So this is where we set up our T accounts with the debit and credit sides and the increase and decrease. So we have cash. Receiving cash means that the debit side is going to increase, and the Michael Delgado Capital is owner's equity, so that is going to increase on the credit side. Yes.
I have a question. So on each transaction, there's one on the credit side and one on the debit side?
Not always. Oh, one on the debit side and credit side, yes. There's always going to be one debit, one credit. Okay, you never will have 2 debits or 2 credits. Okay. I thought you were going to ask on the accounting equation. Remember, you can have 2 assets, but one's going to be a debit, one's going to be a credit. Okay, second transaction here, January 2nd, paid cash for supplies, $165. So which 2 accounts would be affected here? Logan.
Supplies and cash.
Supplies and cash. So we have, if we classify those, we have what?
2 assets.
2 assets. Okay, so we know that's going to be on the same side of the equation. So it's set up like this. We have supplies and cash. Both accounts are on the asset side. Supplies is going to increase. Cash is going to decrease. Okay, then we have paid cash for insurance, $900. How are these, or which 2 things are we working with here? Michael.
Insurance and cash.
Insurance and cash. So classify those. Assets, liabilities, owner's equity.
2 assets.
2 assets. Okay, so this should look similar to the last one. So we have prepaid insurance is going to increase on the debit side. Cash will decrease on the credit side. Okay, now the transaction of bought supplies on account from Canyon Office Supplies, $220. So if we're going to break this down into the accounts, which accounts are used on this transaction? Logan?
Accounts payable
No, you're close. Josh?
Accounts payable and supplies.
Accounts payable and supplies. Okay, so supplies is an asset. Accounts payable is a what? Say it. Liability. Something we owe. Okay, so if you put it on the accounting equation, supplies is an asset, so it's going to increase. And accounts payable is a liability. It's on the right side, so it's going to increase on the credit side. Okay, next one, January 9th, paid cash on account to Canyon Office Supplies, $100. Michael.
Accounts payable and cash.
Accounts payable and cash. So we have an asset and a liability, right? Okay, so the asset is going to decrease on the credit side because we paid cash. Accounts payable is on the right side, and it's going to decrease on the debit side. Huh?
That's a lot of work.
I know. Okay, so there are 4 questions that need to be answered when analyzing a transaction. Anybody know what they are? What accounts are affected? You have to answer. You have to ask those things. What else, Corbin?
How is each account classified?
Okay, then you have to classify them. You have to say, is it an asset, a liability, or owner's equity? What's next? Go ahead.
How is each classification changed?
How is each classification changed? Does it increase or does it decrease? And the last one, Josh.
How is each amount entered in the account?
Okay, and then how do you enter it into the account? On the debit side or the credit side? Okay, you have to know those 4 things. You have to ask yourself those 4 things when you're breaking down a transaction. Okay, which accounts are affected? How is each account classified? How is each classification changed? And how is each amount entered into the accounts? Which 2 accounts are affected when a business buys supplies on account? Colton.
Accounts payable and supplies.
Okay. Supplies and accounts payable. Which one's debit? Which one's credit? Michael.
Supplies and debit, accounts payable is credit.
Okay. Good. All right, that's it. All right, so let's look at work together. Did I put it up for you?
Yeah, work.
Oops, wrong one. How much time did I have?